This is probably going to be a relatively short monthly update. I think I've said that every monthly update the last 3 or 4 months, and then we end up talking for the full hour anyways. Michael is off doing film stuff again, working on a Friday. Personally, I think he's just ignoring us. But yeah, last I heard, he was in an editing session for the last project he worked on, so he will not be joining us. So it's just me today. But that doesn't mean we can't make this time as efficient as possible so you guys can go enjoy your weekend. Boo. I know. Michael working again. Screwed Up Texas is here. Hello, sir. Sulazaki is here. Appreciate you showing up. Austin Phip. I wonder if Phip knows he's got a cousin in here. Better go tell him. All right. So how's everybody feeling about the market, the general market? We can talk crypto. We can talk TradFi. Apparently everybody's talking about Roaring Kitty this morning. Anybody have any opinions on what Mr. Kitty has been up to? People call it manipulation. Other people just call it the free market. And he's just exploiting a hole in the rules. I didn't get to watch his stream, Brent. I appreciate you saying that. I didn't get to watch his stream, but I saw a handful of comments on Twitter about it. Peak comedy. Like Andy Warhol type uncomfortable, awkward satire with hundreds of thousands of people watching. I heard like CNBC or somebody was streaming it for a minute. It was weird. Feldspar, it was weird, but I think that was the intention. I think that was the point. Is I think Roaring Kitty is like master troll, and you also have to understand like he used to be a chief compliance officer at a firm. So he doesn't not know what he's doing. And so I think it is something where I believe personally that his whole thing is a well manufactured caricature, and he's just enjoying himself. And then you have this whole community of people behind him that see Wall Street as I think most people in crypto see Wall Street, and they welcome any opportunity to wreck some firms on Wall Street. All those suit and tie people. Sulazaki market, including where we buy food stuff. If you watch Parks and Rec, there's a place called Food and Stuff where Ron Swanson shops. It's one of his favorite stores. It's where he gets all his stuff and food. David, I'm just screen sharing. I don't know. I don't know what I did differently. Maybe it's because we have like a fully boosted server. I couldn't tell you though. I'm not a Discord expert, despite the fact that we all probably spend 80 to 100 hours a week on this damn social media app. And for our mental health, we probably should take a little bit more time away from it, but it's just so hard not to. It's so hard to walk away. Ryan Cohen is ruthlessly exploiting a shareholder base whose heart is in the right place, but is completely confused and misinformed. He stabbed the movement in the back today. Yeah, I read a couple tweets that were in the same vein of sentiment, that he did a bit of backstabbing today. But I don't know enough. I don't know enough. I think everybody's seen the documentary, but me personally, I don't know enough about the situation or the nuances of his relationship with the rest of the community that would result in such sentiment. But I'll rely on you guys. Maybe I bribed the Discord CEO. I'll tell you, David, if I knew the Discord CEO, I'd make some changes. I would. And there'd probably be some people who aren't on this platform anymore. But that's a story for another day. Anyway, yeah, so market-wise, everything's going well. Block has stabilized around 1.5 cents. Seems to be nice and healthy. We just keep burning supply, keep managing the tokenomics. Obviously, since there's no tokens to be minted, we can only burn supply. I think we crossed a little over 3.1 million tokens in the last couple days. Let me check the actual number. 3.129 million tokens. It's great. Coming up on 5% of the supply since we did our migration, which is awesome. I will tell you, I'm going to preface this monthly report with May was a bit of a mixed bag. Obviously, the market, the macro market, Bitcoin, ETH, specifically ETH, had a great month. We just didn't see that great month translate to significant amounts of DeFi trading volume, which our CLPs rely on that trading volume. And so it was a great month for the sentiment of the market and the fund itself. Volumes were a little low, but we got creative, and we'll kind of go through that as we talk through the report. But I will say, I anticipate this will be the last boring monthly update. And now you can interpret that statement in a couple of ways. I'll let you guys do the work on that one. But my expectation is this is going to be the last boring monthly update that we have. Yeah, I guess you could interpret it that way. Don't do that. Don't interpret it that way. It's meant to be something good. We anticipate there will be plenty of news to share this upcoming month, the month of June. I had 4 phone calls yesterday alone with either clients or partners in Panama that a couple of them were high stakes, high stress. If Barry were around, he's not here right now, but if Barry were around, he'd tell you that stressed out Patrick was wandering around doing laps yesterday because we're getting to that point. We're getting to that point where we are ready to start making moves that will result in revenue. And it's that classic poop or get off the pot situation, and we're at the pooping stage. It's not the most elegant metaphor, but it is accurate. And so from our perspective, we have a few more little things we need to wrap up. A lot of this space, especially Panama, is relationship based, but we did all of that work beforehand. That's why we spent, the last 15, 16 months spending a lot of time networking and conversating, back channeling relationships and just doing that engagement with our contacts and our friends down there, which we're very excited about. And it's starting to bear fruit. I kind of made a post in the guild chat for guild and Asgard members about a month ago, maybe 3 weeks ago. We're in the trust us bro phase, which we're okay with. We're putting in the work. We're building out what we need. I can tell you right now, we have 3 different types of accounts with financial institutions in country, including access to Swift's different networking systems. We have an OTC service that's on board and ready to handle any on-ramping, off-ramping that we need for clients. Previous updates, we talked about how our client side has evolved beyond just replicating our CLP strategy. We're going to continue to do that. We're going to continue to offer it. And but the key is we found ourselves in a position through the networks that we've tapped into that there is a need in Panama for that intersection between TradFi and DeFi, crypto and fiat, which is a direct callback to our original mission statement when we launched publicly May 15th of last year, which is we wanted to marry those 2 sectors. We wanted to bridge DeFi and TradFi, and while we've evolved through that process, we've also found ourselves coming full circle back to fulfilling the same goal, which we're extremely excited about. And so we're in that position now where we can act as essentially a catch-all for investments and institutions that are even remotely interested in anything blockchain or close to it. And on top of that, a little bit of complimentary update is one of our legal representatives in country was just nominated for a position in the Panamanian government. And the first thing he said is we're going to make sure we take care of BlockCentral. I'm assuming he's talking about potential investment opportunities or simply just referrals. Either way, we will now have a close, friendly contact pretty high up in the Panamanian government. So we're actually extremely excited about that. It's something that was unexpected, pure luck. But to the President-elect Molino's office to have a conversation, it's going to go pretty well. David, I'm happy to have a chat. I know we've talked before. Obviously, things have changed from time to time, but we're always happy to jump in a DM or a ticket and have a chat. It is outside of the confines of Discord DeFi, which was always our goal long term, and it's the boring side of the business, but it is something that it will be lucrative enough that we think it will sustain and elevate the DeFi side. So a little backstory for those who are relatively new to what we're doing, and I can kind of go over this for a few minutes. We used the DeFi side, the protocol, to test and develop a strategy in which we can earn revenue, right? So that was our goal. We were going to leverage CLP positions and build out a strategy where we can see consistent returns. And then even if the market contracts, it acts as a soft landing where the contraction isn't as severe as the market itself or the underlying assets that are involved in those positions. And through that, we've built out a proof of concept. We took that proof of concept and we established BlockCentral in Panama in April of 2023, before we ever went public, before we ever executed a pre-sale. All of that, the legal structure, the legal opinion, all of that was in place before we went public. So from a regulatory standpoint, we continue to operate as a Panamanian entity with all the proper due diligence in place. Now, what we did is we took that proof of concept and we took it to Panama, started pitching it to clients, institutions. We have a specific wealth management firm that we work with. However, we network with a handful of other firms in country. And now we took that proof of concept and we've pitched it to a lot of contacts in the industry. A lot of people are interested. A lot of people are excited. And then as soon as those ETFs got approved at the beginning of the year, our interest increased. Is it crashing right now? Now I got to go look at it. Let's go. Oh, no. That's okay. I think it's Roaring Kitty. Roaring Kitty did this to us. Let's blame him. This is the Ethereum chart, by the way. Good job, Roaring. Anyway. All right, so not the best time to talk about crypto ETFs and stuff if the market's crashing. How's Bitcoin doing? It's not holding up that well either. If anybody likes charts, I like to draw lines on charts and see how they interact with the market movements. Also have your moving averages, 20, 50, 100, and 200, along with the VWAP for the year. So if you are a trader and you know what VWAP is, you can see that right here. Anyway, thanks a lot, Roaring Kitty. Market's crashing. So, all right, back to my short explanation. So when the ETFs got approved, things started to evolve. More and more people started asking about other services outside of just yield farming, just outside of revenue generation and money management. And the more we got that question, the more Barry and I started exploring with our representatives in country, what if we offered a suite of services, either custodial or non-custodial, and we could become an integral part of the process of people exploring and becoming interested in crypto. So we've gotten to the point now where we have a friendly contracted OTC service that can do theoretically an unlimited amount of money, onboarding and offboarding. They have their own KYC and compliance. We have our own KYC and compliance. Obviously, all of that due diligence is done before we interact with any individual or entity. So that's as expected. But we got to the point now where we are starting to get contacts and referrals for a litany of opportunities, and a lot of them have nothing to do with CLPs and managing money, which actually makes our lives a lot easier, right? So let's say an institution in Panama is interested in crypto. They are connected to our wealth manager or our law firm, and a big part of Panamanian culture, Latin American culture, and the finance industry is relationships. A lot of people, they will often pick working with somebody that they trust or somebody that they trusts over the largest institution they can find. So what we're finding at the moment is the relationships we've built over the last 18 or 16 months or so are bearing fruit in the form of referrals. And so we got to the point now where we're getting contacted from clients who simply just want to add crypto to their portfolio, whether it's Bitcoin, Ethereum, whatever it might be. They contact us. We already have an OTC service in place. So what we would do is we charge them a fee. Part of that fee is the fee for the OTC service. Custody comes back to us. We transfer custody to the client. That's the end of the transaction. We don't have to worry about getting hacked or holding their funds of any kind. They're responsible for the funds once the transaction is complete. So that's just one example of several of situation where we find ourselves in where the company has evolved to offer those services. So through that process, we've had to dedicate a little bit more capital to the client services side. And we talked about that in the Asgard Guild message update that I posted about 3 weeks ago. That included setting up a new private investment fund. That includes the preparation and paperwork for applying for our payment license. So there's a payment license you can acquire in Panama that will allow our company to better and more efficiently process pass-through transactions for clients, similar to the on-ramping and off-ramping for crypto through our OTC service. So there's a number of things that we're working on. Now, as a private company, you don't necessarily need to divulge everything. However, we try to be as forthcoming with the community as possible. There are certain things that we won't share. There's certain names of institutions or partners that we're working with that we won't share, partly because if you've been with us for the last year, you know there are a select group of individuals who, for one reason or another, continue to try and disrupt our operations, and we continue to just avoid and not engage. And so the issue is if we were to divulge too much information, then a disruption campaign can start, and we don't want that affecting our relationships. However, when we go through that process of collecting revenue and structuring our monthly reports, we will share as much information with you guys as possible about roughly where that revenue came from, how much it was, and some general details about how the company is evolving. But I do believe, hopefully, that this will be, again, the last boring monthly update, because I feel like leading into the future, in the very near future, we're going to have more information we can share from a development standpoint with the business. So that's very exciting. All right, enough about that. The only other thing I can talk about is our CLP positions. We are working on 2 bots. I think I've mentioned this in the last update. We're in the testing phase now with the developers. 2 bots that are going to help automate certain processes, as well as help identify new opportunities. So we'll talk about kind of what that means when we go through the report, because there's a handful of new positions that we opened. I think Carl recognized them the other day, that he's like, the DeFi fund is into some weird stuff, and there's a reason for that, but we'll talk about that as we go through the report. So let's talk about the report real quick. We'll push through this, and then if anybody has any questions, we can go through those. But other than that, it's business as usual. You know, we're doing our best to manage the market. Actually, let's take another look now that I'm interested. Oh boy, it dropped even further, but it bounced. Hold on. You guys want to see? Let's see the really interesting. Here we go. This is the 5-minute chart. Boy, oh boy. Those are some 5-minute candles. That's actually not bad. That's a good bounce. Let's just hope it sustains itself. It bounced right off of 68.4. Okay. Yeah, hopefully it recovers from here. Pretty steep drop in basically every metric. All right. Well, we'll keep an eye on that as we go through this process. Let's talk about May. So as I mentioned before in our Asgard and Guild chat, we mentioned about 3 weeks ago that we had to commit a little bit more capital. So we pulled a little bit of funds from the DeFi Fund. Overall commitment to the client services right now is about 35%, which actually all in all isn't a bad commitment, because we anticipate anywhere from 60 to 80% of our future revenue is going to come from that sector of the business. So we believe the commitment now will more than pay for itself over the next months and handful of years. But we are working on a couple of things right now that will be, I'm hoping I can report something the next week or two just to start the process. I know our 1-year anniversary is coming up June 16th. So I hopefully might be able to pull off dropping some news by the 1-year anniversary, but we will see. Anyway, moving on. May 2024 in a month report. Contents as always. So the recording and the report will be posted in the DeFi Fund channel once we get it up and sorted. I believe Michael has the afternoon and evening off, so hopefully we can get the playback and everything posted today or tomorrow. So we try to get that up as quickly as possible. May summary. Like I said, token price, great. 14.5 at the end of the month. I think we're right at 1.5 at the moment. And that was, we can actually look at it. Hopefully none of you jerks sell while I'm looking at the chart to make it go down. So these are the just basic lines. This whole thing right here, this was ETH giving us that 25% candle, which is great, but it's because our ETH price continues to be heading in a positive direction. So I always tell people, I check the ETH price, which this is the ETH price, and then this is the actual fiat price. So if you ever feel like the token is struggling while the market's struggling, it's probably because its backing asset ETH might be ranging instead of, obviously appreciating, which we like to see. Market cap, this is circulating market cap of 850,000. So this monthly report is for the month of May. The month of May, we had a strong bounce back, right? So April was one of the worst months since we launched when it comes to macro price movement. So May was a strong bounce back. We had the news of the ETH ETF. We're still waiting for S1 approval for that, so we can actually see what the real capital inflows will be for ETH, and see what that impact is. That's a vital point. It's really important to highlight because a majority of our DeFi fund is associated directly or indirectly with Ethereum, and we believe that there is a significant opportunity for that in the future. And the reason we think that is if you go to the ETH BTC chart, oh, that's not good looking. If you go to the weekly chart on ETH BTC, this is going all the way back to 2016. So if I let's turn that off. So actually, let's turn off the ribbon as well. Come on. There we go. So this is the ETH BTC chart going all the way back to 2016. Obviously, there is a long range macro consolidation here that's happening that if you're an ETH maxi, you believe this is going to break out, and you would hope it would end up somewhere, around there. But that right now represents a 150% increase in ETH's value against Bitcoin. Now, all things being equal, if that were to happen, ETH would 1.5x against Bitcoin with its fiat value. And now you're talking about ETH being at somewhere around $10,000. So that's why we continue to be bullish on Ethereum's long-term application, especially as more and more people interact with Ethereum on L2s and soon to be L3s in the future, just out of convenience. Bye, David. Have a good one. I missed it 2 minutes late, but it's fine. All right, moving on. And so it's a bit of a, like I mentioned before, it's a bit of a role reversal from the previous month. Last month, just market basically crashed, but volumes were great. So we had a soft landing when it came to the value of the funds and the value of the positions. This month, market rebounded significantly, but it didn't translate to trading volume the way we would hope. However, we're still able to pull off 5.2% yield for the month. And we've been able to get creative with our positioning, and we'll talk about that in a minute. So notes of interest over here in the corner. Lifetime yield generated 323,000. I would guesstimate 300,000 has been from the past 9 months. And if you look at the value of the DeFi fund, that's more than 50%, which projects us at probably 65 to 75% APR for the overall fund in general. We closed all the Eigen layer allocations. Obviously, that narrative has basically played itself out. So we took all that Ethereum, reallocated across either the client side or different CLP positions. I continue to pat myself on the back about the Carrot CLP. I seen recently that a couple influencers have started talking about Carrot. But if you guys know, we've been in Carrot for the last 6 weeks, and it has been a absolute juggernaut when it comes to yield. And on top of that, we seen our actual position in Carrot increase by about 66% just in the month of May alone. So on top of that, we closed some lingering positions that didn't serve our needs anymore. Link, FXS, and Wrapped Bitcoin. Now, when we come back around and we re-inject some of this capital that was committed to client side back in the DeFi fund, there's an opportunity for us to probably diversify some larger CLP positions into some lower, more like reasonable CLP returns. So Wrapped Bitcoin, Wrapped ETH, USDC, stuff like that. Across multiple networks to be able to derive value from that and have it be consistent. At the same time, we've been experimenting, right? And we talked about this. We opened Safe, More, and Myria CLPs. So Safe is the Genosis Safe project. Genosis Safe is the multi-sig that a lot of projects use. They have a token called Safe. This is their token. Morpheus is an AI kind of protocol. You can look it up, and then Myria. And so all three of them match certain metrics that we were looking for when it came to liquidity distribution versus trading volume and its value range. And all that really means is we identified them as high value and elevated returns on their CLPs. And when we look at the numbers, I'll show you what that means. But that's the experiment we're having. And one of the two bots that we are working on are directly associated with that niche within CLPs, is taking a certain set of metrics that we've customized and came up with ourselves, automating the search and identification of those opportunities, and then allowing us to take advantage of them. So that's one of the two bots that we are currently working on and testing for the strategy. Carrot is the new Pendle. I wouldn't be surprised. I've owned my Hooligan, the NFT, since about 13 months now. I bought it while I was at Consensus because I met one of the team members, and I thought a murderous rabbit was kind of cool. And then when their token launched, originally what we did is I got an airdrop of Carrot, and then we put it into a CLP, and it was going so well that we just kept doing it, and it's grown to a point where it's become a really nice play the last 6 weeks. We'll see how long it lasts. If we need to move out of it, we will. We'll try not to get married to the position, but there's no reason to exit it at the moment. In fact, actually, since the beginning of June, the value of the position is at 21,000, and it has already produced $3,000 in yield since the beginning of June in 7 days, which is insane. That's not sustainable. It's not going to be sustained, but it has been a heck of a asset to do yield farming on the last 6 weeks. Our range on Carrot is really wide. I think it's got 20% on one side and 80% on the other. So it's a super wide range. So impermanent loss isn't too big of an issue, unless if the market crashes, which currently is sort of happening. Where are we at here? Now I'm interested. Now I go back to the chart. So it bounced. It bounced a bit. That's good. Okay, moving on. Yeah, so 5.2. Yeah, it was a drop from last month, the last few months. But again, it was a really weird month for volumes. Our revenues were down. I'm not too concerned about it. It seems to be a bit of a one-off. And then on top of that, like I said, my hope is that this is the last boring month for monthly reports. And when we start talking about revenue in the next month or two, yield generation will just be a category of revenue, which we are very excited to start that process. Total yield generated 323,000, which is huge. And fund diversification, one of Ian's favorite graphics, because it kind of shows you across the board where our funds are diversified when it comes to positions. And block dynamics. So we this was at the end of the month, 2.9 million burned. We don't own any. Technically, we own some that are in the DeFi Fund, but again, we are using those. We buy them. We've been buying slowly and then using the ones we have that we acquired before the migration to burn and supply rewards. It's been going well. Everybody's been happy with rewards. We've been buying back tokens as needed every day or two. And then everything else operates as it should from a mechanic standpoint. And then, as always, the distribution of the treasury across the whole ecosystem. We always try to keep this number 80% or above DeFi Fund and associated expenses. That way, our operational balances 0.1%. We have as little money as possible in our operational balances. It's either in LP or it's in the DeFi Fund or in the client side. So tight ship, running a very tight ship. So the numbers, again, so a lot of these positions were zeroed out. So we had all of our Pendle, ETH, LP, YT, ETH, RS, ETH, basically 18 through 21 here. Those were all zeroed out. Eigen layer, Sweeth was zeroed out. So a lot of that stuff will be off the next monthly report. On top of that, we had where are we at? We had a res position. Res was a pretty popular airdrop. That one went well. I don't think we lost any money on the principal, but we gained about $800 in yield. So we did that for about 2 weeks and then jumped out of that and jumped into some other positions. We closed the Rollbit position as of a few days ago. It continued to produce decent yield, but we got to the point now where the loss on the principal because of the depreciation of the token was pushing the results into a negative. So we decided, you know what? Rollbit might have a comeback. We would fully expect crypto gaming to have a comeback, but with what we're working on the client side, as we have revenue come in from client side, we don't need to be as experimentative with our larger positions on the DeFi side. So my hope is that once the client side is fully realized and we have revenue flowing in, the CLP positions in the DeFi fund can go to more of those traditional blue chip positions where we're just churning out yield while protecting the principal value. And then we can spend, we can have, just say like you have $100,000 position in ETH USDC across the handful of networks, wrapped Bitcoin, wrapped ETH on a handful of networks. Things that are getting anywhere from, depending on how you manage the CLP, anywhere from 30 to 50% APR, which would be fine, especially if you're talking about the scale in which we're talking about. But then you can have those search and destroy CLPs like Carrot, like Safe, like Myria, that you can have, say, a $20,000 position in, and those numbers are 200 to 400, 500%. In fact, actually, Carrot, as right now, is at 1,100%. And that position's been open for like a week in that current form. Stuff like that, where you can have a smaller allocation, but it's just churning out yields. And so those are those targeted smaller allocations. Tighten up. Nice one, Spirit of Texas. Yeah, 1,100% APR on that specific position. It is, like I said, it's a total stalwart. It might change in the next coming weeks, but I've had interactions with the team there. They have big plans. I know the nice thing about Carrot is it's traded on KuCoin, Gate.io, and Coinbase Exchange. So a lot of the Uniswap volume ends up being arbitrage, which is fantastic for people like us who are yield farming, because it's not direct buy and sell activity. It's arbitrage bots just keeping a value parity between the centralized exchanges and the Uniswap position. So it's been a nice little niche that we found with that specific position. Are people doing airdrop to your NFT holders? People are not doing airdrops to our NFT holders, but if you own an NFT, you get a weekly drop of passive income from our liquid decaying NFT, our blockchain Viking collection, which if you talk to Sunfire, he was complaining about how the Valkyrie's Vanguard has the most NFTs of any clan, and yet all the people want them. I was like, well, they're hot ladies. Of course people want them. And of course they have the most in their clan versus any other clan. So he's trying to tell me, like, since they're not rare, they're not worth anything. And I disagree. I think they are highly desired. So despite the fact that there's so many of them, it doesn't change the fact that their value is high. If he doesn't want it, I'll take it off his hands. You can have a conversation with him. He'll see what he says. So for the month, total value change, delta change, second to last column, 24,000. This number is actually half of what it should be because we pushed some funds to the client side. So it actually should be closer to 50 to 60,000. So it's a solid month. Half of it was yield, half of it was appreciation, roughly. And so if we look here, Carrot on line 13, the position opened at $10,000, closed at $16,000, and had $4,000 in yield. So even if you count the yield from the end of the month position value, that's a 25% return for the month of May just on Carrot. It's insane. It's just insane. That's a 250% return on that position for the year if you were to extrapolate it out. And so that's where we're hunting now, and we're automating that hunting of finding positions that meet a certain criteria where we can take advantage of this over and over again through different positioning. DeFi fund allocations, like I said, 35% client side. Again, we believe that's a healthy investment because we believe 60 to 80% of our revenue is going to be coming from client side in the future. And the rest of it is a breakdown of our different CLPs, trading position. At the bottom here, you have Foxify and the Merkle position. Merkle was I'll be honest with you, we didn't mean to earn money there. So Merkle is a platform in which people can incentivize certain pools in positions. Somehow, one or two of our pools qualified for one of those Merkle airdrops, and we ended up getting like $1,200 in Arbitrum from it. We did our due diligence. We wanted to make sure it was safe, and it wasn't something where we were getting airdropped like something that would drain our wallets. Come to find out, it's a legit team. It was legit Arbitrum, so we had $1,200 in Arbitrum that we pushed into our CLP a couple days ago. Operational assets. The only change here is we have less block in the wallet, so that changed its value by a little bit. Besides that, there's no real change here. DeFi fund metrics. This one again, if these numbers had included the amount of funds that we pulled to the client side, it'd be about $25,000, $30,000 higher. But we were positive for the month from a P&L standpoint, which is always good. Even if it's flat, at least it's positive. So we're all good there. And what else is this? Treasury allocations. Treasury allocation, again, this is the overall treasury. We went from 578 to 606. Healthy growth, but again, it's not representative of the total value because we have X amount of capital allocated to client side. And that's the same. Actually, operational and LP allocations. A lot of this growth was from the growth of block. So it went from 78 to 98,000 in value. This is our mainly our liquidity provided and farm. But I think I need to talk to the team. I think we're going to pull. So for anyone yield farming, I know the APY is at about 52 right now, 19 for staking. Super healthy numbers. Like, we don't want to have our rewards be too high where it feels inflationary, despite the fact that we're a deflationary protocol. But we also want to be too low where you guys don't feel like you're incentivized to continue to farm or stake. We feel like these numbers are healthy. However, if enough client revenue comes in, those numbers will go up because we have to pull tokens from somewhere to reward them, which means the open market, which, as you understand, will cause some sort of value increase. But we do have about 15,000 from the protocol that has funds in the farm, and I need to talk to the team. We'll probably pull that out in the next week or two, and then this number will increase a few percentage points because of it. Money Booster, you have to hold a BVC NFT, a Blocking Viking Collection NFT. However, I will tell you, there's only 239 of them because somebody accidentally killed one, redeemed it. They're redeemable, if anyone didn't know. Someone accidentally redeemed theirs, so we went from 240 to 239. It's a very small collection. They don't come up for sale very often because of the weekly rewards and because of the backing value of the asset. It's relatively hard to get your hands on one. I would guess maybe a higher than average offer on the secondary market, like Alpha Shares, would probably net you one, but you'd have to go look at the history there of what sold and what didn't. But yeah, all I got to do is hold the NFT. In fact, if you go to the NFT page, there's a single staking box here. And if you were to click that, the rewards would go right into your staking amount right here. This is the DeFi Fund wallet, so there's a reason why there's 50 NFTs in there. There for a rainy day, or maybe a hoard boxes day. Hoard boxes. So if anyone is new, they don't know what a horde box is, I'm sure someone in the community can tell them. All right, moving back to the report. Protocol metrics. Market cap obviously increased with the price of Ethereum and then the price of Block along with it. So we're just over $1 million market cap. I have no ambitions to turn this into a huge market cap project. Obviously, that's not our goal and that's not our structure. We are a DeFi fund, which one could essentially describe as a on-chain hedge fund or mutual fund. That's how you would describe it. That's not the official terminology. We are a DeFi fund. We deal with digital assets. But the idea is the token is deflationary. We grow the backing value of the token, which is the DeFi fund, which client services. That revenue will be going into the DeFi fund, thus increasing the backing value of the token and the protocol. And then our job is to just create passive income. You know, we tell people with dynamic strategies, set your take profit to 100% or 80%, 20% compound. Take healthy profit, because that's the point of the protocol, is automated passive income. You set your dynamic strategies and you can walk away for a week or a month and you come back and everything will be operating as expected. So in my opinion, a deflationary token's market cap isn't the end all be all of whether or not you can measure its health. I think there's a handful of other metrics that mean more. It's just a matter of that's just how we operate. Block Series A2 is coming. Yeah, I don't think so. Backing LP market cap ratio, circulating market cap ratio. We're almost back to the 40-20 right here. LP circulating market cap ratio and backing LP circulating market cap ratio. 38 and 19. Healthy, super healthy to have LP that size. That's a credit to the yield farmers. You guys are doing the Lord's work when it comes to liquidity for the protocol, so we greatly appreciate it. And you guys are being rewarded comfortably. So we went from 65 at the beginning of the month to about 55. I think a big chunk of that was the fact that I think another 50 or 60,000 jumped into the yield farm. So obviously that does dilute rewards a little bit, but we're still above 50%, which I'm happy with. And staking has been almost flat, 19%, which is great. And then token supply down to 72 million. At the moment, we're under 72 million, which is great. Which means we burned, as of today, I think 4.2% of the total supply. I want that number to start increasing in speed once we have client revenue in the door, because we need to go get those rewards from somewhere and then burn them. And so we want to make sure that we make it healthy, and if we can, increase the speed of it. Then market OTC token buys and burns. Because of April's downturn, we took it easy on the market purchases for the month of May, about $7,000 worth, just when we felt like it was needed. So like during the month of May, this whole move, this had nothing to do with like us buying. I know sometimes the narrative is oh, they just buy their own token. It's not investors, whatever. We only spent $7,000 on purchases from May 1st to May 31st. So this move had very little to do with us. We had a handful of new investors come in, but also that move was predicated on the fact that this happened during the month of April. And so you pair those two together, and this was essentially hidden value in the backing asset as the backing asset increased in value. So something to keep in mind. I know sometimes the narrative is, oh, the only buyers they have are themselves and other people are investing. It is what it is. You look at the month of May and you realize we only spent $7,000 on the whole month buying back tokens. It means something else is happening, and it's usually something healthy. So other than that, that's the monthly report for the end of the month. And I think we kind of went through all of it. And here I said this one was going to be short, and we're coming up on an hour already. Patrick walking down Venice Beach will have people stopping him for selfies. Oh God, no, no, thank you. I will tell you, if you guys were here from the start and you saw what we went through at the beginning with the troublemakers, they that don't need to be expanded upon. More than ever, I have no interest in being a face of anything anymore. I just want to be left alone. Let us do our work. Barry and I talk about it frequently. Like, the sooner we can just do our work and automate this process, and everybody who's here and has trusted us and is part of the community is benefiting from it, that's all that matters. The rest of it doesn't matter. We don't want to deal with it anymore. We don't want to be a part of it anymore. We just want to build a good business. We want to take care of our shareholders, which are you guys, and the rest can be left out in the weeds because it is not important. So, other than that, I guess I will wrap this up unless we got any burning questions. I don't know if anybody has anything they want to ask at the end. You don't have to ask. You don't have to come up with something weird, just if you did. But we can go ahead and wrap this up since we're coming up on an hour. That's it for the month of May. Like I said, I expect this to be the last boring monthly update. And I'm trying to push to have something for our 1 year anniversary. If we do miss our 1 year anniversary on the day, don't worry. We are working on it, and we're getting closer. I know I don't want to fall into this we're building thing month after month for 2 years. We're not going to do that. But we are going to have some results soon, which I'm very excited about.